Damania, Head of Institutional Equities at IDFC Securities, now joins us. Anish, hi, good morning. Good to have you on the show. So the million-dollar question, do you think the correction is over and is it time to buy? Or do you think we could revisit the lows that we saw in the month of August?
Yeah, so going in the short term, it is quite possible that you might see some more volatility continuing in the markets. But however, having said this, I'm fairly bullish on the earnings prospects of the companies now. So we are having the twin advantage of two things. One is the fall in the commodity prices. It has been substantial. All imported commodity prices, which formulates a bulk of our imports, their prices have fallen substantially. And rupee depreciation. So rupee depreciation will benefit the earnings of those companies which are service oriented or in sectors like pharma, where the raw material price fall has been steeper than the rupee depreciation as well. So if I look at the context of the companies which are there in the Nifty, you find that majority of the companies will benefit a lot from the rupee depreciation and the commodity prices falling. So this year we are expecting about a 14% growth in the Nifty earnings. And this year I believe that unlike in the past years where analysts started off with a high base and continue to downgrade the earnings, we probably will see the end of those downgrades starting this year. So we are looking at earnings growth of 13%. This is despite the fact that we had a 4% decline in earnings in the first quarter. So looking at the second, third and fourth quarters combined, we are looking at about 15.5% earnings growth for the next 3 quarters. So which is most of it will come in the third and the fourth quarter as the base impact creates its own thing. So as we go towards earnings momentum, and we have seen that market over the last 4-5 years has responded to earnings growth fairly significantly. It started with being stock specific, and I think as the Nifty earnings also start moving forward, we'll see a similar impact. So I wouldn't be as bearish over the next 6 to 12 months on the Nifty as what a lot of people would suggest. And I would think of probably upgrading Nifty targets rather than downgrading.
Okay, that's interesting. Anish, would you have those plausible Nifty targets for us and a timeline also?
So we are in the process of just formalizing the numbers. Our last Sensex target was 27,000, and that probably is under review. So once we formalize that, I'll be talking about it. It looks like we are looking at an upgrade there.
Okay, Anish, what's your sectoral call or portfolio call right now for in this market? Which 2 or 3 sectors do you think can take leadership for this market? Because for better part, the leadership was with private banks, and that clearly has seen quite a bit of fall over the last few months. We have seen a lot of profit booking, a lot of decline in names like ICICI Bank and even HDFC Bank. So from here on, what sector do you think can provide leadership to the market?
So I think clearly what we are seeing is 2-3 sectors which can provide leadership, and I wouldn't discount the private sector banks. I think there has been a correction in the stock prices, and probably that's a good time to enter, because in the banking space the private sector banks will continue to lead the growth story, because we are not seeing any large slackening of earnings momentum in the private sector banks. But however, what we'll see probably, and which is continuing to happen, is the pharma and the technology packs will continue to lead the market momentum ahead. And I would even step back to and say that even the oil marketing companies will also lead this momentum ahead. So clearly, the oil marketing companies, pharma and IT will be the clear winners. Private banks will continue the stride which they are into, and we are looking at these kind of, and specifically within each of the sectors. Within the capital goods sector, there will be some players. Within the cement sector, there will be some. So all those companies where the earnings growth looks very strong, and that is something where we will be very bullish on.
You wouldn't be worried about what steel companies might do in the coming quarters in terms of earnings and the repercussion that might have in terms of gross NPLs for bank stocks? Private as well?
So yes, there is that worry, and that worry is knacking the market. So steel stocks, definitely, we have a negative view on steel, and that continues, and probably that will continue for some more time. Also, there's a large exposure to steel companies. About 6 to 7% of the bank's books are exposed to steel companies. A lot of them have already been classified as under restructuring. Some of them probably will fall under NPA, but that will be taken into stride. So I think there will be some pressure. A large portion of that pressure will be felt by the PSU banks.
Okay. You did say, oil marketing companies, Anish. What about upstream companies? Yeah. We've seen a bit of rally. Of course, crude has also rallied a bit, but at current valuations, do you think there's value in stocks like ONGC, GAIL, Oil India, or maybe even Cairn?
GAIL and Oil India, probably one can look at them. ONGC, the fact that the stocks have corrected now, maybe they would be pricing in all these corrections in. But however, there probably is less of an earnings trigger in ONGC at this point of time. So at best, I would stay neutral on that stock.
Okay. Just a quick word, Anish, with regards to the macros. The reason I ask is that we have the GDP data for Q1 coming out today, but we have high frequency data points, say, such as the credit growth, which also came out, and that's now slowed down to 8.4%, though it might lag GDP growth. In your sense, do you think that Q1 FY16 GDP could have maybe a positive impact on the markets if in case it does come at 7.5% or maybe higher?
No, I think more than the GDP data coming out, I think it's more. I think people are looking forward to how the RBI governor responds on the interest rate scenario. That is probably what is going to drive the market a lot more than what the current GDP numbers would come. So GDP numbers could either miss or come close to what most people are expecting. I don't see that as a big issue which can drive the markets. Obviously, whenever data comes out to be positive for a couple of days, you tend to see some positive impact on the market. But I don't see that as a big impact driver right now. I think right now I will probably look at how the commodity prices behave and how the interest rate scenario on the back of that behaves.
Okay, Anish, we leave it on that note. Thank you very much for joining in this morning and talking to us.